Everybody, I'm Stephen Clagian, and welcome to Back to the Futures. I'm so honored to be here each and every day. And today is our second day here on Back to the Futures. Really excited to be able to teach all of you the futures markets. I've been here 41 years in the industry. August 1st of this year, 41 years in the industry. I started trading options, and I went to stocks, and then obviously I went to stocks, futures, forex, but again, futures are my favorite in the world, and I'm so privileged to be here each and every day. So we saw an 830 jobs number come in a little bit better than expected. So the fear of a recession, the jobs number came in at 233 versus 255. They were looking for a lot worse, and that pretty much gave the market confidence that we're not headed to a recession just on the jobs number. Now, it's not an unemployment number. This is just a jobless claims number. And I've been doing this a long time, and usually the jobless claims numbers have really they move up and down 3 to 4 or 5 handles on the S&P. But today, everybody got all bulled up, right? And markets were deeply oversold. And guess what? They like them, and they think there's no recession coming. So again, the jobs numbers will cause this. So today, based upon looking at my technicals, this is my technical indicators that I have here. Looking at the trading view, I have my system built on trading view here. If we could bring up the trading view chart, I'd like to show it to everybody. I don't know if I can do that. Okay, great. All right, great. So this is I look at when I look at the markets. Okay. When I look at the markets, I look at the continuous contract, the S&P futures, and based upon my research, you cannot just trade the S&P futures without looking at the underlying ETFs. And so when you have the S&P futures, I look at the spiders, I look at the SDSs, the Pro Ultra Short. When I look at the NASDAQ futures, I look at the QQQs, I look at the SQs. When I look at the IWMs, I look at the TZAs and the RTYs, the Russell futures. When I look at the Dow futures, I look at the DIA and look at the SDOWs. Okay. When I look at oil, the crude oil futures, I look at the USOs. When I look at gold, I look at the GLDs. And when I look at the 30-year bond futures, I look at the TLT, the 20-year ETF. Now, my research has shown me, and I've taught this to the top hedge fund managers, that during the U.S. session, because the continuous contract trades 23 hours in a day, the underlying ETF trades 6.5 hours a day. I do not look at pre- and post-market data on the ETFs. I look at from the get-go from 9:30 to 4. And when they correlate like they did today, guess what happened? Boom. Everything is aligned. You're swimming with the tide, and now we look for great patterns and great setups. I look at the time frames on the indexes. I look at the 3-minute, the 5-minute, the 15, the 30, and the hourly. And on the underlying ETFs, I look at the 5, 15, 30, and hourly. Today, we had a monster move here. You can see the volatilities back. Yesterday, we were up like 65, 70, and we were down 30 on the day. So we actually dropped like 130 points off the highs. Today, we had the pullback beautifully right after the opening, and then we just never looked back even after the wholesale numbers came out. So what do I look at here? So everything I do is based upon combination methodologies / combination theories. I look at the way I look at the market. I look at the market in a trend, having trends, buy reversals, sell reversals, correlations, and disconnects. And when you have the 5 conditions, you have 2 strategies, 2 strategies for each. You have a buy and a sell divergence, right? So you have 5 conditions, 10 strategies. With that being said, right, way I look at the market, I use my 4 indicators 1, 2, 3, 4, and I look at my numbers to the right, which I'll show you right here. I look at my 4 indicators, 1, 2, 3, 4, and I look at the indicators, the numbers to the right. And basically, I use multiple time frames. So like I said, today I saw the 15-minute time frames. I get my buy reversal on indicator 4. I got the buy reversal on the 30-minute, and then I got the buy reversal on the hourly chart, which is right behind me. And then guess what happened? Bam, right? What happened? all of a sudden we just started seeing beautiful patterns line up. I used the smaller time frames like the 5 minute time frames for entries and exits. Okay, and then basically today, after that, you get the smaller time frames, then you get the pullback on the 15-minute time frame, and this is exactly what happened here today. So looking at my my indicator here, indicator number 4, you can see I got the buy reversal, blue over orange right here, and then the spiders correlated excuse me at 9:45, and then I wait patiently. Okay, as you get this is the push up here. All right, and then I waited patiently for the first pullback right here on the 5-minute time frame right here. So this pullback right here on my overbought oversold oscillator was for me to be able to look at the market, get the first pullback on the 5-minute time frame after the 15-minute S&P futures correlated with the underlying ETF, the spiders. Okay, now you can you can see this MACD excuse me you can see this MACD right here, yellow over blue. My terminology, you'll hear me say a MACD is positive. And so when I got this pullback right here, right into the 10 bar, this is a 10 bar weighted moving average. It goes back to the inception of the asset. So for example, if you got a new symbol that came out today, it would stop plotting as of today on the 10 bar weighted moving average. So this actually goes back to the inception of when the S&P futures started, and it's on every time frame. And we got this nice pullback right here, and then this is the push up. They got down to the 07.5, and they pushed up to about, I don't know, 22, 23, 24. And then I was waiting for this pattern right here, and this pattern right here got the pullback right around the 1 o'clock time period right here, right after the bond auction, and the 30-year bonds, pretty much got pushed up and then right back down here after the bond auction. So this pullback right here on the 15-minute time frame, you can see how the price action is hovering right above the 10 bar weighted moving average here. This pullback here was the first pullback on the 5-minute after the 15-minute time frames correlate, right? Not only with their 5, but also correlate with each other with the underlying ETF, the spiders. And then this pullback right here was very powerful. This pullback down to the 08.5 level on the S&P futures, really, really, really powerful. And you can see how this pattern here pushed up in the bond auction, and then the 15-minute time frame got oversold into the positive MACDs, and we pushed up to new highs on the S&P futures. Now, looking at the spiders, you can just see the importance of looking at the underlying ETFs. And when you do this, you can see right here is when I got the buy reversal right here, and here's the pullback on the 5, and here's the pullback right here on the 15. So very, very, very powerful. You can see that here at 9:45 in the left-hand corner is when the 15-minute time frame reversed to buy. And then let me see if I can change the time period here. Let me see if I can do this right. The 30-minute time frame reversed to buy right here at 10 a.m. And then the 60-minute time frame reversed to buy, the 1 hour, the hourly, reversed to buy here as well at this reversed here at 9:30 on the opening right here. So once 9:30 came about, the 60-minute time frame reversed to buy, the 15-minute reversed to buy at 9:45 using my indicator 4, blue over orange is a buy reversal, and then you can see right on the 60-minute time frame that and then the 30-minute time frame reversed. While I have the 60-minute time frame here, I want to show you something again. You can see that yesterday on the close, we pushed down to new lows here, and we were deeply oversold. And if you see my horizontal line right here, if I've taught this to some of the top hedge fund managers in the country, how to use a MACD correctly. And when you use a MACD correctly, it really enables you to have the ability to see the market and pick up the buy and sell divergences. if you look here, you can see we're making new lows here on the 60-minute time frame, and the MACDs did not confirm the low. Normally, if you make a new low for the day, the MACD should have made a new low as well, and it did not. Granted, that's why, again, even though we had a great, somewhat of a good number this morning on the 8:30 jobless claims number, we got the push up here, and now we have another gap here, okay? Again, you see how this gap got filled, but there are a lot of gaps here, and there's a lot of gaps down below. And if you look at the 30-minute time frame, I'll show you even on the 30 how when you made the new low, you can see right here that the MACDs did not confirm the low right here. If you look at it right there, look at the dotted orange, the dotted white lines there, okay? So it's really important to understand that using the indicators the way I have on my line really will give you the best ability to see the market. So the S&P futures right now, if you look here on the 5-minute time frame, you can see we have what's called a sell divergence in a positive trend, right? We're making new highs, and the MACDs are non-confirming here. We caught a great short here earlier when the S&Ps pushed up here to around the 30, I think the high was 32. They pulled in. You're making new highs, non-confirmation. And again, right here, we're seeing new highs here. And again, the MACDs are not confirming the high. So I think we could potentially sell off here, okay? We could potentially sell off here. If you look at the NASDAQ or if you like the Qs, let's look at the Qs here, okay? And everything lined up beautifully here, okay? So if you look at the Qs, right, we gapped up. We actually, right here at 10 o'clock, was it 10 o'clock here? Yep, 10 o'clock, we got the buy reversal. You can see this solid white line right here. I call this line my pivot line. And the pivot line is on every time frame, whether it's a 3-minute, 5-minute, 15, 30. I just want to see where these MACDs are coming from. If they're coming up from below, I call it a pivot line. And if the MACDs are coming up from below, and again, look at how all these patterns repeat themselves on the various different assets. Here's the first pullback on the 5-minute after the Qs correlated not only with the 5-minute, but also correlated with the NASDAQ futures. And this is why it's important. I taught this, like I said, to some of the top hedge fund managers, where you want to be able, you can't just trade the underlying S&Ps or NASDAQ or Russell or Dow futures, gold futures, oil futures, bond futures, without you looking at the underlying ETFs during the U.S. session. Now, I'm adamant about this because so many times you may be getting like a sell signal, okay, on the S&Ps on the 15-minute time frame, but guess what? That's just deemed a disconnect, meaning I'm getting a sell on one and a buy on the others. And if I have a buy on the spiders on the 15, 30, and 60-minute time frame, but just at the 15-minute S&P futures reverse to sell, the trend is still up on the bigger underlying ETFs, and that's what I go with a lot of times, okay? So right now we're seeing a sell divergence, which means we have a sell divergence in a positive trend. The 15, 30, and hourly charts are bullish on the S&P, the spiders, and the Qs, right? Also on the Russell and on the diamonds. And then guess what, right? We're going to wait for pullbacks, looking for a pullback, which we did. S&Ps around the 1 o'clock time period got down to the 08 level, right around the 10-year bond auction. And then they just got absolutely went parabolic to the upside. Okay. If you look at oil here, well, let me just see here what the symbol for gold is. Is it GC? Gold futures at GC. All right. So gold futures. This is a little tidbit using my software. Whenever the algorithm reverses to buy with the MACDs above the pivot right here, this is a classic sell signal right here. And gold dropped about $6 off of that sell signal. Again, I know this is all new to you, okay? And this is something that eventually will, you'll come to learn and understand. But when you see the MACDs right here, All right, the MACDs, this is indicator 1, is above my pivot line, which is right here. And the algorithm reverses to buy right here at 12.15. Overbought. Look at this signal right here. So the gold futures got up to the 24, maybe they got up to, what is it, 63, and then look what they dropped down to, 57, 50, well, actually like down to 54 and a half. Okay, so they dropped about $8.50 on. So this is a set strategy that I have as well. Okay, again, looking at the underlying ETF. If you look at the GLDs, you can see how we got a big buy reversal on the GLDs on the opening here, right? You see the gap up right here, and then we got look at this pattern right here. Look at this great pattern. The 15-minute time frame on indicator 3 is my overbought, oversold oscillator. Got oversold into good buying pressure and into a positive MACD. And look what happened right here. Boom. You can see that gold ran about $14 from that point, $13 to $14. Very, very set strategies. Again, using combination methodologies, using combination indicators, using the combination multiple time frames will truly open your eyes. Again, like I said, I stream, I talk to the top hedge funds, and I taught them how to use multiple time frames using multiple indicators. Now, let me just back up. A lot of people are going to come at me and say, well, Steve, indicators lag. That's true. I never said they didn't. Okay? Price moves, indicators follow. But guess what? When the price moves, all these numbers change on my chart, right? So when they change and I get the readings, then I know how to attack on the strategy. So for example, yes, you're right. Gold gap, GLDs gapped up. Okay, the GLDs gapped up. And then look what happened here. Boom, we got the push up. And then we got the nice pullback right here on the GLDs. And you can see the GLDs got down to the around probably like the 2280 level. Okay. And then it never looked back. And then you can see that they eventually pushed up to the 23. Well, they ran about $10 there on that, right? Now, the way my system works is on every trade that I look at and every pattern, whether you're looking at a 3-minute, a 5-minute, a 15-minute time frame, or 30, I'm always looking between 1 bar to 8 bars. So if it's a 3-minute time frame, 1 minute to 24, a 5-minute, 1 minute to 40 minutes, a 15, 1 minute to 2 hours, you get the point. Just keep moving it up, okay? Depending on. There is so much alpha to be made, especially during the pre-market session. And again, this software is available on TradingView, okay? So what's important to understand is I have 5 keywords: consistency, discipline, confidence, patience, and passion. So a lot of people said to me today, hey, Steve, what do you think the trade of the day is going to be? It's a 15-minute time frame. And I actually posted between 12:30 and 2:30, we're going to get that pullback. And bingo, we got the pullback at 1 p.m. Okay, actually about 1:15. Sorry about that, about 1:15. What's important to understand in trading futures is to be able to, in Tradier futures, I'm so excited that, now they got futures under their belt and they want to really get people acclimated. The margins is phenomenal for the micros. But if you're a beginner, even before you start trading, you really need to start to learn how to paper trade, because to be able to learn from me, there are 5 conditions, right? The 5 conditions of me now. You have to understand, basically, how much time do you have to dedicate this? What asset type, right? Do you want to trade? Is it the S&P futures, NASDAQ, 30-year bonds, gold, oil, Russell, Dow, YM futures? Doesn't make a difference. But so the index futures, right? And then you have to then decide, okay, how much time you have allotted to do this, okay? Whether you want to trade during the U.S. session, if you have enough time, if you're going to school, going to work, or you want to trade the Tokyo and or European session, all right? Now, when looking at the market, right, it is truly important to understand that when you take a position, it's important to start with paper trading, then using micros, and then using the big ones if you like. There are, what I teach here is what's called range bound. So I'll look to say I'll be looking to buy, like here, for example, I said I was looking to buy here. I believe I said between the 04 and 04 and 10. So that's a 6-handle move. So let's say you start at 09, maybe you go down to 07, but guess what? The low is 08.25. Okay, and based upon that pattern off the 15, right? And you can see this pattern right here. Okay, you can see this pattern right here. Let me just move to the S&Ps here. Let me just change this. S&P, let me just type it in, ES. Okay, right here. Okay, so when you look at this, right, on this pullback right here, this was beautiful. I said on this pattern, I'd be looking to buy anywhere between the 02.5 and 10.5 range. They got down to 07.5, and then they absolutely dropped from there. Okay, now it's important to understand there's a term obviously called scaling in and scaling out, right? So as you're accumulating, whether you're going 1-1-1-1 or what you're doing a trade called pyramiding, right, where you're buying 1 here, 2 here, 4 here, 8 here, whether you're doing micros and or big ones, you have to always place your stops, right? I can't tell you how many horror stories I've seen in my life and heard where people don't place stops. I mean, do you drive a car without using brakes? The answer is no, right? So you got to apply brakes to the equation because you just don't, you never know what's going to come out. And I would always do market orders based upon instead of limit orders, because if you're trading futures and let's say you have a stop order in to sell S&Ps at 40 just right now, and news comes out and you have a 40 stop limit, and it goes right through. Well, guess what? You're not guaranteed to sell it, right? You're going to become an offer, right? Your stop limit becomes an offer. Versus if it's a sell market, as it's breaking 40, it touches, you're the next tick down. So it could be 39, it could be 38, it could be 39.5, it could be 39.75, it could be 36, whatever the next print is, right? So again, using stop orders, understanding how to use the software, understanding how to use the matrix, putting the orders in, putting the orders out, scaling to be able to, as you're buying, looking at, for example, let's say here, okay, now I did not expect a gigantic 40 handle rally here. I expected maybe a 15 to 20 off of the 15-minute time frame right here. Okay, I did not expect the S&Ps from here to go up 40 handles, from 08.25 up to 48.25. No, I expected maybe 12 to 15, 12 to 18. That's not bad, but they ran 40. So let's just say you bought them here, okay, off the 15, and now you start seeing you're pushing up, okay, right here. Now it's 12, and you bought a couple S&Ps. Well, you can sell one up 4. You raise your stop to break even, right? So if your stop was, let's say, 03, 04, now it's going in your favor by 4 points. Now what you want to do is you look to sell one maybe, or you just raise your stop to break even. If I'm jumping up and down and saying this is a pullback on the 15-minute time frame into the positive MACD, right, on the 15, this is the buy, boom, and then right up, and away, right? So now what you really have to remember and think about, okay, is the understanding that when you're trading the market, to be able to learn how to use the software, be able to learn how to scale in and scale out. So let's say you bought 08.5s. Now it's 12.5. You have an option to either sell or raise your stop, or sell some and raise your stop to break even. It goes to 16, 18, 19. Well, you say, whoa, my goodness gracious, I'm just up, I'm up 12, 13, 14, 15 handles here. Well, you could sell some and raise your stop to like 14.5, 15. It goes to 25. You get my point? That this could continue. Now, in this pattern, we just ran 40 S&P handles. I didn't know where that was gonna, I did not think, like I said, but based upon the pattern, I was very confident that 15-minute time frame, if you look here on the spiders, I'm going to show you the spiders really quick. here how this buy divergence. So this is a buy divergence in a trend. So you can see the positive MACD right here, which is yellow over blue. You got the oversold condition, and there you go, up and away on the S&P future. So again, the 15 to 30 to 60-minute time frames on my work are bullish. And then what you want to be able to see and understand is that when you have that oversold condition into the positive MACD, which is yellow over blue, then you'll be able to see the divergence. So very, very, very powerful. I spent nearly 10 years of my life building this to be able to visualize the markets, to be able to see the patterns. Everything I do is based upon visualization and repetition. And if anybody has any questions, you can text me at 914-500-7484. Love to hear from you. And again, I'm so proud to be here. I'm really excited to be part of Back to the Futures, Tradier Futures. It really is going to be a phenomenal product for Tradier. To me, with where prices are, I hear it throughout the whole country. People like, I want to trade. I want to learn how to trade. And, but the prices of stocks are exuberant. I don't have the $25,000 to trade. As the PDT rule comes into effect, well, guess what? Futures, the micro E-minis, I was with the chairman of the CME many moons ago, about 5-6 years ago, 7 years ago, something within that window. And he was so adamant about the change of how the micro E-minis were going to really enhance most people's trading, because a lot of people were on simulators, and then when he wanted to take the people from the simulators to actually go on to the E-minis, and they came up with a product called the E-mini micros. And I'm so glad they did, because so many people are really getting involved in the futures markets. I think it's going to explode the futures markets. We've already seen volumes now. Yesterday, I think we did over 2.1 million futures contracts when the average was like 1.6, 1.7. All right. It's starting to grow. Yes, volatility picked up, but more and more people are, just blowing me up with, hey, I want to learn how to trade futures. And that's why I'm so glad to be here. And next week, we're going to be on Tuesday and Thursdays. So I'm really honored to be here. Thank you for Dan for giving me this option, giving me this opportunity, and giving me the ability to teach you everything I know in my 41 years, teaching the technology, being on the right side of the market, being able to identify these patterns. Again, 5 conditions: a trend, a buy reversal, sell reversal, correlation, and disconnect, all with using my indicator 4, using the multiple time frames. And of the 5 conditions, we have 10 strategies of buying and sell divergence. It's simple, but yet a little complex. And that's what I'm here to help each and every one of you. But understanding, if you can master the art of divergences, you've mastered the art of trading. I've been jumping up and down for that forever. And like I said, if you can master the art of divergences, you've mastered the art of trading. To be able to visualize, see exactly how things are lining up. Look, I've done this, I've seen it, I've traded it, and now it's my turn to give back to all of you. So I'm so blessed to be here. Back to the futures, and I'll see you next week on Tuesday. I think we're going to do the same time, 1:30, and Thursday, 1:30. Again, the software was built on TradingView, and if anybody has any questions, you can text me at 914-500-7484. S&P futures up 117. I do expect a pullback off the 30-minute time frame. The 30 and 60-minute time frames are getting way overbought, so we should get another pullback in the next, by today, sometime tomorrow, for another push up to about the 5380, 5400 level. Next week, we got some big numbers: PCE, CPI, and retail sales. And again, just be consistent each and every day. Hit your goal. Whatever your goal is, hit it. Stop. You've achieved. You've taken money out of the market, and now you just wait for another day. And be consistent each and every day. Thank you. Have a great day, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.